name is Tony Gallippi. I'm a co-founder of BitPay. We're the largest Bitcoin payment processor in the world. Companies like Microsoft and others use us to accept payments in Bitcoin from their customers around the world, and we can settle to them to their bank just like every other payment processor would. So we're the world leader in B2B for digital currencies.
My name is Bill Clerico. I'm the CEO of a company called WePay. WePay processes a couple $2 billion a year for online marketplaces, and we've really identified that as a specialty. We help marketplaces charge buyers, pay sellers, and we help them manage fraud risk. And so we process a couple $1 billion a year for our customers like GoFundMe, FreshBooks, Care.com, and a bunch of others.
Well, great. Now, we're going to dive a little bit into digital currency in a moment, but I wanted to sort of touch on an overarching theme that I think encompasses that. Is sort of this. To what degree is sort of the sharing economy just a euphemism for like cheating, right? If you talk to the cab industry, you talk to the hotel industry, you get everyone's like, well, they're just not playing by the rules. To sort of what degree, like, what's your answer to that? It's like, hey, why isn't it a level playing field? Why do you guys get exempted? Not you personally, but yeah.
Yeah, I don't think it's the fundamental premise is that it's cheating. I think it's more that the economy has evolved so fast that the regulations have not kept up. And if you look at, towns and cities and nations, they're starting to regulate the sharing economy more and more. They're passing special legislation for guys like Uber. Airbnb is collecting occupancy tax. So, I think because these companies have grown so big so quickly in an area of the law that really has never been explicitly specified, they've grown quickly in these areas, but I think their regulation now is starting to catch up. So I think they'll continue to be very successful and continue to grow. I don't think their business is sort of predicated on skirting the rules. So,
Anthony,
that's my take.
Yeah, I mean, I think they're clearly finding a need that exists in the market. So if you look at Airbnb, for example, right, they are serving a purpose that was previously served by hotels. If you need to travel to another city and you needed a place to stay for a short term, you would normally stay in a hotel. But hotels may not be where you want them to be. They may not have all the amenities that you need. And if there's an excess supply of housing because people are on vacation and their house is sitting there vacant, why not put it to work? So it really is a more efficient use of resources that we have. Homes that are not being used are now being used. Same thing with cars. If people are heading in the same direction, why not carpool? With Lyft, what they've done with Lyft lines is a great way to enhance the ability for people to ride share without having the stigma of the 1980s, oh, let's join a carpool. So I think there's lots of opportunities, but you look at the regulation and it will catch up, and it will probably be the insurance companies that start, with a question when your insurance comes up for renewal. Do you drive passengers around for money? And if you check yes, well, then you're going to have to, have an adjustment to your rate. So I think the insurance market is probably one that will start with it. They'll probably react much more quickly than the cities do.
So what kind of a threat is regulation to the successful growth and development and innovation on these kinds of services and platforms?
Yeah, I think it's kind of ironic. We're sitting here in Las Vegas where Uber is illegal. You can't use it here. And so I think it's definitely a real impediment to growth. And I think, the less progressive municipalities and states, will definitely slow innovation. I think it hasn't stopped Uber. They've continued to excel across the country. Here in Las Vegas, I waited 25 minutes this morning for a taxi to come here. And so it inflicts, a real tax on its consumers in terms of inefficiency, a tax in terms of innovation. So I think, if I were giving advice to the governments of the world, I think you need to embrace this type of thing and regulate it, so you don't encourage gray markets and other sort of costs that come with it too. So I think it's a real tax, but I think the consumer pressure will eventually win. I think, I'll make a bet that I think within 2 years, Uber will be legal in Las Vegas, despite the power of the taxi limousine lobbies here.
Yeah, I was going to say, if anybody wants an interesting cab ride conversation, get the cabbie talking about the power and behind-the-scenes influence of the taxi money people. Yeah. You might never get out of the car. Now the Bitcoin, the digital commerce that umbrellas under this. We just had the big controversy with Silk Road, right? So speaking of a lack of regulation, it's sort of democratizing. There's one side that says it's democratizing capital, democratizing finance. the other side that says it's just this unregulated market. It's like saying if you have no sheriff in an old western town, you've democratized justice by letting the lynch mobs run. So to what degree does some of the beating or mistrust that people have of Bitcoin, how legitimate is that, and how do we offset that?
Well, we didn't just have Silk Road. That was shut down in 2013, so it's been almost 2 years now. And we've made a lot of progress to have many more mainstream merchants start to use digital currencies because it has a lot of power and a lot of utility. When you look at the opportunities to create online marketplaces, we talked about Uber. Well, eBay was really kind of the first one, right? Matching in buyers and sellers and building a platform that creates a network effect where the more people that are on it, the more incentive you have to participate in it. When you start to look at digital currencies, now you have a payment method that works anywhere in the world. So you can take the eBay model and make it truly global. You can shop in ways where you couldn't necessarily buy unique items from estates or auctions or things that you couldn't get before. So the reputation part of it, I think, is going to solve just by time. The early internet had a really bad reputation. Congress actually debated, should we make e-commerce illegal? Because people were being scammed with emails from Nigerian princes thinking they won the lottery and they were getting their bank accounts robbed. And so Congress wisely debated it and said, no, the right solution is not to ban e-commerce, but it's to educate people that if somebody you don't know asks you for your bank account, don't give it to them. And we're kind of going through a similar education process today with online payments and online identity theft. People are a lot more security conscious about their passwords and what they do on the internet.
And speaking of security conscious, how is the industry sort of coming around with some of the security issues that have been exposed around, like Bitcoin wallets? That's become a big concern. I guess Case just came out with a hardware geared solution. So to what degree do you need to be really sophisticated to trust that platform? Because it seems like that could create an elitism factor. Like, my mom might not be comfortable with Bitcoin because she's never going to figure it out, right? So kind of the security and then just the ease of use. How are those going to work out?
Sure. I mean, I think the best analogy is compare it to the early days of email. You probably wouldn't have rushed out to get your mother and grandmother an email account in 1991, right? You would have waited until it's a lot more user-friendly and the ease of use was there for them. But the utility was there, and if you had the ability to use it, it was a fantastic tool. So the security is absolutely essential, right? You're dealing with a piece of data that you have to hold, and you can't lose it, and you can't have it stolen from you. It's a lot easy for people, I think, to understand a physical possession. Hey, I have to lock this down. I have to store it either in my wallet or in my safe, and people have a good sense of how to protect a physical item. But you ask them to apply the same tactics and secure their data, the average person doesn't have a really good way to do that, right? They use a password that is very short and easy to remember. Well, guess what? If it's short and easy for you to remember, it's short and easy for somebody else to guess. And that doesn't work with a digital currency like Bitcoin, where if they get that information, they can get access to your money. So there's lots of security things that we're working on, as well as other companies, to allow multi-factor authentication. I need to respond to a text message plus have my password. Maybe I need to have more than one person have access to this account and sign off if I want to spend it, so that if somebody gets into my phone or into my online account, they can't really do anything because one signature doesn't accomplish much. So the property that Bitcoin has, that it's irreversible, meaning once it's gone, really forces you to think about security, and it forces us as a company to really innovate on a lot of things under the scene that makes our security a lot more, I think it's a lot stronger than banks. I mean, you can never sleep at night, truly, but you have to design a system where breaks are unrecoverable, and that is a lot of pressure, and a lot of work has to be done.
And to what degree, I mean, to what degree should it be perceived that it's kind of audacious to actually invent a currency? And I know that may sound naive, but I mean, we go through financial crisis. There's a global financial crisis. The U.S. rebounded. We go through these various financial situations, and you have regulators or government stepping in to sort of adjust, tinker with the levers to sort of hopefully save the economy. But if someone comes up with, if everybody starts using this totally independently created currency, I mean, how great is that, and then how dangerous is that, I guess, is what I'm trying to figure out. And Bill, you could bring it. You don't have to be quiet over there.
Sorry?
Yeah, no, you could join any moment.
Yeah, no, I mean, I think my background is less on the digital currency side, so I think I'd defer to the other experts on the panel for that. You know, I think it's certainly interesting when you start to decouple, you know, the public good from governmental controls, right? And so I think and on the sharing economy, we see that where these economies can flourish and prosper without regulation, and a lot of times it's actually fundamentally very good. You know, it does create these unintended consequences. On the currency side, I think I'd have to defer to the other expert on the panel to comment.
Just real quick, so you said that you're going to give a gift to the world. What's your gift to the world? You're going to kill something?
Yeah, so I think as a younger entrepreneur, you know, I think you have to make bold claims and really deposition yourself in the market against larger competitors. So my bold claim is that we would kill the PayPal button with the checkout redirect, and I think we've made a lot of progress on that front. We see a lot of checkout is a much smoother experience today.
And why is that a gift to the world?
I think it makes e-commerce smoother, so it makes it easier to purchase. It provides access to people that normally wouldn't be able to check out and buy online.
Right. And Anthony, did you have anything to say on that earlier topic on the audacity of a digital currency?
Yeah. How dare somebody do that, right? Well, how dare somebody invent email when we have the post office? And if you want to send a letter, the post office works just fine, right? How dare somebody invent email? Who would ever want to use that? You know, how about text messages, right? Who would ever want to use that when you can just call the person? So, you know, whenever you see new mediums emerge, it creates more choice for consumers, and more choices equals more consumption, right? We have so many more ways to communicate now, from instant message to text message to chat to who knows how many chat apps are on the phones now, right? So, you know, every one that is added, it offers consumers another choice, and it generally increases the consumption overall of that activity. So you're looking at payments, and quite frankly, credit cards were never designed for the internet. We spend a lot of work trying to make them work that way, but they really were never meant to be used that way. So if somebody were to come up with a better way to pay for things on the internet, well, sure, that's going to increase people's usage of it. It'll increase e-commerce in general, and every web store out there is going to be excited about it. And when you look at the opportunities for Bitcoin, it can do things for online payments that credit cards just can't do very well. Credit cards don't work well internationally. Cross-border doesn't work too well. Micropayments, if you want to try to buy something for $1 or less, that really doesn't work well on the internet. If you want to try to buy something that's expensive, say over a couple $1,000s, that doesn't work very well either. So we're starting to see the opportunities emerge for new payment technologies to kind of go after the stuff that the existing payments just don't do very well, and we're doing just fine at that.
I might jump in here and just be a little bit contrarian, because our business is primarily credit card processing, and we've had long debates about, do we support cryptocurrency and Bitcoin? And I'd actually argue that credit cards are a pretty awesome payment instrument. They give the consumer at least 30 days to pay. They give them rewards. They give them easy chargeback protection against fraud and other sort of bad things. They're backed by banks and major payment brands that the consumer has a strong affinity to. And so, in my opinion, that's kind of the bar. And I think Bitcoin and guys like BitPay and other folks are building on top of the base protocol to try to make them equal. But in my opinion, from a consumer perspective, the gap has not been crossed yet. I think credit cards are a far better way to pay for consumers today. Now, I think from the merchant side and in FX and in other types of transactions, the cryptocurrencies can be very kind of powerful, but I think there's a very, very high bar that's been backed by 20 or 30 years of innovation and consumer marketing that's tough for guys to cross. But I think that is the opportunity. If crossed, could change the whole economy.
So we have WePay works like with you guys have worked with the Apple people, Apple Watch, the Google Wallet, right?
I'm sorry, I can't really hear
No,
you.
you've worked with the Apple Watch and the Google Wallet, Apple Pay, I'm sorry, and Google Wallet. So
Yeah.
Good.
Yeah, so our take is that we're an infrastructure provider to online marketplaces. We want to help them accept whatever type of payment they want to do. So today it's Visa, MasterCard, American Express, Discover, Google Wallet. Soon it'll be Apple Pay. Soon it'll be Bitcoin. I think we want to be able to offer them a variety of ways. We look at ourselves as sort of a AWS for payments for those types of companies.
So Anthony, so he gave the argument for the strength of the credit card. Why is Bitcoin a potentially better way to transact?
Well, I mean, credit cards are great for some things, and they're great for consumers because consumers get the candy, right? You get double cash back and triple cash back and miles. Well, guess what? The banks don't pay for that. It's the businesses that pay for that, and they just pass it on to everybody in the form of higher prices. So yeah, credit cards have a place, and if you want that buyer protection because you're buying something from a business that you don't really know for sure that you can trust, then you're probably going to use your credit card. I still use my credit card a lot when I shop online. But if it's a business that I do business with on a regular basis and I trust them, they give me a discount if I pay in Bitcoin because it's more convenient for me and it's cheaper for them. So I can start to shift some of my spending that way. When you talk about some other types of payments, whether it's digital goods, which are increasingly cross-border, gaming platforms, video games, it's very easy now for a game developer to accept a payment from all over the world in Bitcoin. And it's not so easy if you set up a game and suddenly it becomes really popular in India, and you got to go figure out, well, how do I set up a new payment method to take advantage of all these people in India that suddenly want to buy my product for $2? It's not that easy to do. So, what we're focusing on now are some of the use cases where credit cards just don't work very well. Again, cross-border, low ticket, high ticket, and trying to come up, like what Bill said, really enhance the experience to the point where it is usable and people are satisfied saying, wow, that was like a really easy way to pay. And it's a unique thing, right? You're shopping on your computer and a QR code pops up, you grab your phone, you scan the QR code and you press send on your phone, and magically over the internet, the screen turns green and you've suddenly, paid your computer from your phone over the internet. So it's kind of a neat experience, and it works the same way if you're in a retail store. But I think Bill's right. I mean, there's a lot more innovation that has to be done on the user experience, but the opportunities for the technology are pretty tremendous.
And how much of an augmentative component is this digital commerce for the overall topic, which was this sharing or the collaborative sharing economy? Is it a vital component? Is it just make it easy? Like, I'm saying, what role is it playing in the advancement and adoption of the old sharing economy?
I mean, I guess I just look at it as there's a set of really strong tailwinds, right? There's currently today only about 6% of commerce happens online. So you still have 94% of it happening offline and moving online. And the line is sort of getting blurry. Like, is Uber online payments? Is it offline payments? It's kind of this weird area in the middle. And so that shift is happening, and that's kind of one tailwind. I think the sharing economy is largely growing up on the back of mobile phones. Having computers in everyone's pockets here allows anyone to be a seller, and it allows anyone to be a buyer much easier. And so it creates a massive opportunity for marketplaces in new verticals, right? Beyond just eBay. It's Airbnb, it's Uber, it's Dog Vacay, the marketplace for dog walking and dog sitting, right? And these are real businesses being built that are doing phenomenally well. And so I kind of fundamentally think that's the future of e-commerce. The most exciting e-commerce companies of the last 5 years have been marketplaces. It's not the online retailers of the world. It's not diapers.com we're reading about right now. It's Airbnb and Uber and all the rest of it. So I just think there's a lot of these mega shifts happening, and sort of the tip of the spear is online marketplaces. And if you're selling payments, that's a good place to be.
And then for you, is Bitcoin really as untraceable or untrackable as some people like to make it out to be?
No, it's not. I mean, you have to, be thinking about when you use Bitcoin, every transaction that takes place is on a public ledger, and it's there forever. So there's a lot of people that are doing data analysis on the blockchain, and that's how they caught the guys from the Silk Road and everybody that was attached to it. So, I mean, it goes to show you that if you want to try to do something that's illicit, you don't want to leave a piece of forensic evidence that can never be erased, that's out there forever with the transaction. And I agree with Bill. I think marketplaces are great, and we're seeing a huge uptick in actually marketplaces for labor. Everything from private language tutoring lessons to dog walking, right? It's not just selling your old junk on an eBay type store anymore, right? It's taking advantage of people's talents and creating a marketplace and unique marketplaces for that kind of stuff.
And just real quick, in the few seconds we have left, so the dinosaurs in this industry now, the ones that are just heading for the tar pit, and then the ones that are going to represent the new species of the future. One or two from each of you.
I guess I'm still very bullish on the card brands long term. I think Visa, MasterCard, American Express have tremendous businesses with tremendous network effects. So I'd say they are wild dinosaurs. They're really big, really entrenched, really strong dinosaurs. So maybe that's another contrarian way to answer your question.
Yeah, I mean, I think Uber is here to stay. I agree with Bill. It's only a matter of time before they come back from Vegas. You know, I waited in line about 10 minutes at the Vegas airport to get a taxi. When I got in it, his credit card machine was broken. So when I got to my hotel, he's sitting in the valet line, the people were behind him honking. He had to grab my card, manually call it into the office. I had to give a verbal, approval. It took 5 minutes for me to pay before, I could actually step out of the car, right? It wasn't a great, experience. And besides that, the car was kind of old and it smelled. I've never had that type of an experience with Uber because people drive their own cars and they take a lot more pride in it. So I think, anything where you have people offering up their own property to share, you're going to have a much better experience because it's somebody's home, it's somebody's car, and they're going to keep it cleaner than a taxi or a motel room.
It does beg the question whether sometimes those people can be taken advantage of. I mean, there was the one report out today that some Uber drivers have been pressured into taking these sort of like subprime loans to buy nicer cars just so you would have that nice experience. So it does beg the question whether there's a new ogre. But unless you want to say that really quick, we're going to wrap. Go for it.
No, I was going to say, I think that's a fair point. I think some of the downside of marketplaces are, on the positive side, they bring a lot of people and give a lot of people jobs and give a lot of people opportunity, but it also really exerts a tremendous amount of pressure on them to provide great services at a very competitive price, and that can manifest itself in sort of some bad behavior.
Yeah, I mean, it makes the whole reputation rating system that much more important.
Excellent. Well, great. Well, thank you all. And I'm sure they'll be around if you want to hit them with questions that we didn't address in the short time we had. Thank you.
Thanks.